business owners, no matter how big or small, must pay taxes when selling their products and services. It's an inevitable part of running a business. One such unavoidable cost is sales tax, and for many small businesses, it can be overwhelming to figure out how to handle it properly. Hi, my name is Natalie from SaasAnt. I will be covering all essential information about sales tax and a few ways to handle it properly. Let's get started with the very basics. Sales tax is the fee charged to consumers when they purchase goods and services, and businesses are responsible for collecting sales taxes from their customers, as well as remitting them to the relevant government body where a sales transaction has occurred. Generally, most items are subject to sales tax. However, there are some exemptions to sales tax depending on the type of product being sold or its value in certain states. Sales tax is not applicable to businesses which do not have a nexus. Nexus is the vital connection between a taxpayer and their state, granting authority to tax within its bounds. Without sales tax nexus, states would be unable to collect taxes from those who are subject to them. For most states, this sales threshold or nexus is $100,000 or 200 transactions. There are a few states which have a higher sales tax nexus, such as Alabama, $250,000, California, $500,000, Mississippi, $250,000, New York, $500,000 and 100 transactions, and Texas, $500,000. So if your business does not have sales worth $100,000 or above, or if you're selling your products and services in states where there is no sales tax, then you're exempt from sales tax. Streamlined Sales Tax, SST, simplifies complex tax collection and administration for retailers and businesses selling across multiple states. Companies can maximize efficiency in their sales process without having a physical presence in each state where transactions occur. SST was introduced in 2000 by the National Governors Association, NGA, and the National Conference of State Legislatures, NCSL, and it has 25 member states. Here are some of the benefits you can experience as a business. You may sometimes choose to offer your products and services outside the U.S. In such scenarios, you need to understand what value-added tax, VAT, is and how it is different from the sales tax charged in the U.S. Here are a few quick pointers explaining the difference. Value-added tax, also known as VAT, is a type of indirect tax used in many European countries around the world. Sales tax is used by many U.S. states and localities. The rate of VAT varies by country, but typically ranges from 5% to 25%. U.S. businesses don't have to deal with the burden of a national sales tax. Each state sets its own rate, which can differ from as low as 2.9% up to 7.25%. VAT differs because each stage of production incurs a tax. In contrast, sales tax in the U.S. is collected only once at the sale of the final product. Businesses can claim a credit for taxes paid at previous stages when reselling products. In the U.S., resellers use resale certificates for an exemption from paying sales tax. Calculating sales tax accurately seems like a straightforward process. Let's take an example of an item priced at $100 with a 7% sales tax rate. This means that you would need to multiply $100 by 0.07, the decimal form of 7%, to get the amount of sales tax collected, which works out to be $7 in this case. When added together with the original cost of $100, this brings us to a final price charged to the buyer in this instance, $107. However, though it may sound, in real time there are many complex scenarios where businesses need to use appropriate formulas and methods to calculate sales tax. Let's look at the standard sales tax formula applicable to most businesses. The standard formula to calculate sales tax is sales tax equals net price multiplied by sales tax rate divided by 100. The formula to calculate the final price of the product with sales tax is final price equals net price plus sales tax amount. Thanks to the advancement in financial technology, a lot of small business owners can save time and resources through sales tax automation. It helps streamline the process of calculating, collecting, and remitting taxes owed on taxable transactions. This can save time and resources for small business owners by ensuring that all due taxes are accounted for and meet sales tax compliance. Here are the 3 benefits of sales tax automation. Speed and accuracy. Tax laws vary by state or jurisdiction, so it's essential that a business has access to up-to-date rules, regulations, and exemptions when it comes to calculating sales tax obligations. With automated solutions, this information is already embedded into the software, allowing businesses to easily configure their system based on their own specific needs. Power and control. The power behind these systems lies in their ability to automatically detect different types of products or services being purchased and then adjust rates accordingly. Forms and templates. In addition to providing accurate calculations, automated systems also offer features such as pre-filled forms for filing returns with the necessary agencies. QuickBooks is by far the best financial software for small business owners. QuickBooks takes the guesswork out of sales tax with automated calculations. When you add a sales tax to an invoice in QuickBooks, the software automatically applies the correct rate based on the date, location, type of product or service, and customer. The first step to setting up sales tax in QuickBooks is ensuring your products are categorized correctly. This ensures that taxes are applied properly, as tax rates and rules can change from state to state. Once products are classified correctly, QuickBooks makes sure that taxes associated with each sale are calculated correctly according to their category and location. You can also record sales tax payable in QuickBooks. Use SaasAnt PayTraQer with QuickBooks to automate your sales tax compliance. PayTraQer is a powerful application that syncs online payments and e-commerce sales with QuickBooks Online, making it easier than ever to ensure accurate sales tax compliance. With PayTraQer, businesses can quickly and easily record all payments received and, as a result, all associated taxes paid. The automated, real-time updates save time and money for businesses that would otherwise spend hours manually entering data into multiple systems. This automation also eliminates the possibility of double entry mistakes or inaccuracies due to manual data entry. If you want to know more about sales tax, I will leave the link for the extensive article for you. Until next time, happy accounting!